Hi, and welcome to another exciting show here with me, Carmel Fisher, where we bring you all you need to know about the capital markets out there and companies doing very interesting and disruptive things. Today, we're spotlighting Adageis. Now, Adageis is a healthcare technology company committed to revolutionizing patient care through its patented fintech AI platform. To speak with me today is CEO Shane Speirs. Welcome.
Thanks for having me. Good to see you on a Monday morning.
There we go. Yeah, that's how we do. So I gave a very brief introduction of a day. Just tell us more about what the company does. What is your AI platform really designed to do? And what's your next steps going forward?
For sure. My background is I'm a geriatrician, a primary care physician that focuses on older adult care. And really popular in the healthcare marketplace right now is this idea behind value-based care, right? That you provide high quality, low cost care to your patients, which is something that everyone can get on board with. Which is an easy thing when you think about the idea. But to put that into practice isn't always so easy, if you will. And I'll give you an example. I used to sit and practice with, a stack of PDFs this high and try to say, well, John Doe has United Healthcare insurance, so that falls under this incentive plan. And, Jane Doe has Blue Cross Blue Shield, which falls under this incentive plan. I have to hit these measures. And I used to spend half my day sorting through PDFs trying to tease out who has what insurance and what measures I need to hit. Which, when you live in a market like Phoenix, where we have 100 different insurance plans and 1,000 different, individual plans under those insurance companies, that's an easier thing said than actually done in practice. So at Aegis digitizes that. We make it easy to see what measures you need to hit, how to hit them for each individual patient by we auto recognize what insurance plan your patients have and then what incentive plan they fall under. And so that's what we do at Adageis with the idea that we want to make value-based care accessible for anyone, whether it's Dr. Smith, who owns his own practice on the east side of the greater Phoenix area in Mesa, or it's someone large like Banner Healthcare, right? That should be accessible for anyone. And that's what we do.
Awesome. So timely as well. I mean, just the thought of anything these days taking half your day to complete it in terms of administration is just becoming so geriatric, for lack of a better word, right?
For sure.
And
Burdensome. Geriatric works well too, though.
There we go. There we go. And so what you're saying is that they just really the platform is designed to optimize revenue cycle management for healthcare providers in particular, correct?
For sure.
Awesome. So, your platform is stated to currently support around 150,000 patients that live across 70 providers in 2 states. Walk us through the revenue model, how you go about charging. Is it per patient, per provider? Do you take a percentage of the recovered revenue? What does the customer acquisition cost look like compared to the lifetime value? So bring us up to speed there, please.
Yeah, absolutely. So our revenue is we charge a per provider per month cost. That scales the larger your organization is. And I'll tell you, so we sell it like a SaaS-based solution in the marketplace. We're a software as a service company in the fintech or financial technology area of business. And what we do is, if you're a smaller practice, we have a per provider per month cost. And then as you get a practice that's larger in size, you do gain the economies of scale. So that it tends to be the more providers, the more physicians, nurse practitioners, physician assistants that you have within your practice, the per provider per month cost goes down. Just because there are economies of scale, we have to build out a certain overhead, like a connection fee to the individual electronic healthcare record systems, et cetera, et cetera. And that's how we charge the platform. That's how we charge it currently to our customers. Now, you asked a very interesting question, which is, do you take a percent of that value-based care revenue? That's something we're looking to build out in the future as we become more popular in the marketplace and as we enhance our current platform. That's something that we're actively working on right now. We're not currently operating that yet, but that gives an option to practices that really want more of a help from us, want more direct oversight, people helping them, et cetera, et cetera. So we're working on that.
Awesome, and we'll be keeping our eyes glued to the recent news to see what develops there in terms of that. Now, there's also mention of a patented AI-powered solution with the patented risk engine, PRE. How
Yes.
defensible is this intellectual property in a market where tech giants like Microsoft, Oracle are heavily investing?
Very good question. And I would say defensible right now and very defensible in the future. So we don't have a preliminary patent or something like that. This is a full patent issued by the United States Patent Office. And we submitted a subsequent patent to extend the reach and make it more defensible. So we actually believe, major conglomerates, insurance companies, healthcare delivery systems are in violation of that platform right now. And then, of course, with this subsequent patent that we applied for and are actively hoping to get within the next few months, I would say, I believe that becomes increasingly more defensible with our updated reach of the current patent. So, when you look at going to bat against these tech giants, you mentioned Microsoft, Oracle, who are both heavily invested in healthcare technology. And then you have the giants like the Kaiser Permanente's, the United Healthcare or Optum. It is, I would even say, scary to go to bat against those individuals. But the way the healthcare market is moving, I believe the infringement is only going to further in the future. So I believe we have a very strong case to defend our patent.
Wonderful. Now, you are targeting 580,000 patient lives by Q2 2025. Was that reached? Because that's nearly a 4x increase. Tell us more about that milestone and what that looks like.
We did hit that milestone. So
Wonderful.
we actively cover more than 580,000 patient lives to date right now. Yes, that's a 4 times increase. I mean, we're always looking to grow faster and faster. So it's nice to take a step back and reflect and say, yes, you did have some large growth over the first part of this year. But I think it just goes to show you how people really make use of our platform and they're looking for something like what we have. The idea behind value-based care and everything I mentioned at the beginning of this call, it's a daunting task to try to overcome. And so people are looking for a solution right now that enables them to participate in these value-based care metrics, these contracting, et cetera, which is becoming more and more important in the healthcare world today. The MGMA estimates that over 50% of all revenue from primary care is coming from some sort of value-based care incentive, whether that's a shared savings pool, individual quality measures, making sure that your risk adjustment factor or RAF score is high from proper coding of your patient's illnesses. These are all important aspects, especially in the primary care market. And then I would say, up until about 10 years ago, it was mostly the primary care specialty that focused on the idea of value-based care. They started expanding that to the highest spend areas like cardiology and nephrology somewhere around that time. And now it's prevalent throughout the medical specialties where we have pain management providers, behavioral health, we have dermatology, we have healthcare specialties throughout the medical spectrum. Even the high-level surgical specialties are now focusing on value-based care. And so it's exciting time, and that's why we've been able to grow so fast.
Awesome stuff. Now, tell us more about how this growth is materializing. Is it signed contracts, pipeline opportunities, market projections, and then what resources are required to scale the operations at this pace?
Well, I used to have more hair than I do today. So, a lot of time and effort has put into
Right?
scaling that. But that's nothing that we haven't been through. My partners and I, our team members here at Adageis, we were serial founders. And so we know how to scale the companies and to bring in the right team members in order to support that. And one of my favorite things that my partner Trace Barney says is, you only 20% of the marketing that you're doing at any given time is working. but you never know which 20% is working for each individual practice or physician or large medical group. So you have to do it all. And so to answer your question, we do it all. We do social media, paid advertising, SEO. We have sales reps out in the market that cover different states. We have people slamming the phone lines all the time trying to get introduced to new clients. We have to do it all. And so that's what we do.
Hey guys, just a quick interruption to your regularly scheduled podcast. I hope you're enjoying the show. If you have not yet, please go ahead and subscribe so we know who's watching and we can bring you more of what you want to see. We hope you're enjoying the show. Again, thank you for subscribing.
On the factoring-based service model that you're currently exploring for medical receivables financing, how is this going to diversify your revenue streams?
Right now, we're selling our solution on a per provider per month cost, as we talked about at the beginning of the call. Medical receivables financing is almost taking an idea of that while charging a percent of revenue, while giving some practices some upfront money based on the quality incentives that they're getting on board. And that was a lot, but let me break that down that it might make more sense to our listeners here. So in general, most of the value-based care dollars that you're getting for 2025, you're not actually getting that check until Q3, Q4 of 2026, which is far out from practices that are trying to meet, the cost of what they're doing today. They're trying to make sure they have enough to fund payroll. And we run into practices all the time that are taking out loans from banks every year just to cover payroll because they know the value-based care revenue dollars are going to roll in, but they're only getting a small portion of that on a quarterly basis. So I get some small payout from Q2 of 2025 for my medical practice in the later part of Q3. But the majority of that, over 50% of that, is not coming until next year. And so you can imagine, most practices are struggling just to make payroll or cover overhead, to where if you incorporate what I would call financing model into that, giving practices more upfront dollars from their value-based care and us taking a piece of that on the end, that helps ease some of the burden for moving towards value-based care. And I believe not only is that another revenue stream for our businesses, but our goal with the whole Adageis team is to make value-based care within reach for anyone, as we mentioned at the beginning of the call. And one of the hugest hindrances to that is just the idea with the delayed payments. You're waiting on the money that you're working towards. And people that have lived in a fee-for-service model forever can't afford to miss out on those payments or have them delayed. And so this opens up not just another revenue stream for us as a company, but a way to alleviate and get more practices on board with value-based care, which is, I think, a goal for the entire healthcare system.
And that somewhat touches on my next question, but if we can get a little more specific, you say most providers, many. Can you give us more specifics on the actual addressable market opportunity for this?
Yeah, absolutely. I think the addressable market for this financial receivables or factoring is really going to help the solo practitioners. It's estimated that over 93% of primary care providers, that means physicians, nurse practitioners, physician assistants, are participating in a large organization, meaning they work for a huge conglomerate like Intermountain Healthcare or Kaiser Permanente, et cetera, which is fine. That's a great option for practitioners. But I like the idea of, maintaining independence. If someone wants to own their own practice, that's a very hard thing to do these days. And so what is the addressable market for the factoring business or the financial receivables model? It's helping those individuals out there that are trying to start their own practice, that just can't wait for that revenue to come through. And so that, I believe, really expands access and addresses that market of the solo practitioners or a group of, three physicians that have come together to own their own practice, that's helping those individuals stay independent, which is something that's near and dear to my heart.
But Shane, it does sound like you may be becoming a fintech company. Is that true?
It is. We actually pitch our product like a fintech product because basically, on our live dashboard, it's all about tracking revenue. It's about, hey, here's how much you've earned today, here's how much you can earn tomorrow, and hey, here's an easy way to get that money. And so it is. It doesn't have to be a negative thing. We should all want our practices to earn the money that they deserve for providing high quality care. And that's all that we're trying to do at Adageis.
With that in mind, does any regulatory considerations come into play with this?
Not at all. If anything, I think the current regulatory space, and I would say most of that is defined by the Centers for Medicare and Medicaid Services, or CMS. The regulatory space is looking for solutions to help practices move to this model. I'm pretty up to date on where they're trying to model how do you make value-based care achievable. And they've actually had to recently pull back some of their initiatives just because there aren't a lot of solutions out there. To be able to do this, like I mentioned, if you don't have a technology platform to help you, to sit through and sort through a stack of PDFs or try to log into 20 different online systems when on average, I only have 15 minutes per patient and 7 minutes of that is spent on documentation. Like, I don't have time to do that as a practitioner. And so the market is looking for something like this. And so when you talk about regulatory scrutiny, I believe it's the opposite in our case. They're looking for more solutions like ours to present themselves, which is favorable for us, but also favorable for all the physicians and practitioners in the marketplace as well.
For sure. And in, the bigger scheme of things, partnerships would make a significant contribution, as far as I can see. But your partnership with AthenaHealth is pretty notable. How critical are these marketplace relationships for your go-to-market strategy?
They're critical. We have we have integrations with 90 plus different electronic health record systems. And being a marketplace partner is a notable part of that because that means that we have to connect to draw data from those electronic health record systems. So we rely on them to make sure that, we have a reliable connection, that we're informed of updates. And we've found that AthenaHealth is specifically eClinicalWorks, the larger players, Cerner and Epic, are very good about keeping the relationship alive with their partners, providing appropriate documentation, having a go-to person on their side of the table in case we have questions. And so it is critical to maintain that relationship. But to go back to the regulatory aspect, they're actually required by law to allow us to connect and retrieve data in a structured platform called FHIR. And so they do a good job of providing that data. They make it easy for us. And it's certainly easier with the larger electronic health record systems out there. And AthenaHealth is one of them. I started my practice on AthenaHealth. They've been great partners ever since, and we look forward to working with them and others in the future.
Wonderful. Quick question. What's the percentage of customer acquisition between these partnerships versus direct sales?
Mostly direct sales. So the marketplace serves as an area that, yes, we do get a minority of our new clients from the different marketplaces that we're on, but it almost serves as a talking point that you've gone through the process of certifying yourself. You're HIPAA compliant. You have a robust enough platform and team that you've been certified to get on the marketplace. And so it's almost like a feather in our cap when we go talk to an AthenaHealth client to say, yes, we're a marketplace partner. We work with them regularly to make sure that, our product continues to work, stay compliant, and is secure. And so it's almost a feather in the cap rather than a true sales a sales lead for us. But we do get clients directly from the marketplace, and so it is significant.
Awesome. And how does it affect the margin structure doing it this way, the direct sales more as opposed to through the partnership?
It does cost us money to be on the marketplaces. And so we need, doesn't matter where we get the client from, as long as it's just a matter of we have to pay them a fee to access that client's data, which, is a cost of doing business. We're going to have overhead in some place, and we can't offer a free product to our customers, but we still offer what I believe is a very valuable platform to these practices at a fair cost. And most of, not all of our marketplace partners do have some sort of fee, but I believe it's in a fair way. So there's no gripe on my side of the table.
Wonderful. This has been a great conversation. I want to give you one last opportunity to inform our audience and potential investors out there about any milestones upcoming, obviously, that you are able to speak to, perhaps things they can look out for in the next 12 months.
We have some exciting things in the works. We do have a lot of artificial intelligence as part of our platform, but you'll be hearing about some very exciting updates in the future. How to further automate the documentation, the coding piece, how we continue to make providers, physicians, nurse practitioners, physician assistants, their lives easier in the healthcare space. And how to further that mission towards value-based care. So there'll be some more exciting updates to come in the coming months, and I look forward to telling the community about it in the near future.
Fantastic. This has been CEO Shane Speirs with me, Carmel Fisher, and we're chatting about Adageis, the healthcare tech company committed to revolutionizing patient care through its patented fintech AI platform. Shane, thank you so much for joining me, and you guys stay tuned for more.
Thanks for having me. Have a good rest of your day.
You too.
To you, as always, by the Harvest Podcast, available anywhere you listen to podcasts.